Welcome to the Wired for Wealth radio show, where you get access to world-class leaders that offer proven solutions for your life and your money. My goal for you is for you to think better so you can do better, so you can feel better about your future. I'm John MacGregor, your host. We are absolutely blessed and honored to have Christopher Lansford, our certified cryptocurrency expert. I mean, look, there's so much confusion about crypto, right? It seems like every article I read only confuses me even more. Maybe you feel the same. In fact, the last article I read in the Wall Street Journal the other day, it was titled, "What is Cryptocurrency and How Does It Work?" And it was here the author was trying to position this article as the definitive guide to cryptocurrency. And I will tell you, by the third paragraph, my head was spinning. It was like mental gymnastics. And I was even more confused afterwards. And I will tell you, if you've heard me say this before, my philosophy on investing has always been, if I don't understand it and I can't explain it in a simple and effective manner, something my grandmother would understand, then I will stay away from it. Yeah. So the reason I invited Chris onto the show is because Chris is an expert, not only on cryptocurrency, but he's an expert in how to explain it to people in layman's terms, so you can walk away understanding the good and the bad as it pertains to crypto. And what I like about Chris is his mantra, which is knowing what you're doing before you buy Bitcoin or before you buy cryptocurrency. We're going to get into that in more detail. And his approach has really helped raise awareness of how this works and the inherent risks, that's the key, involved in participating in the cryptocurrency market. Chris is an online instructor who specializes in educating individuals on how to understand the foreign language, which it can be, of cryptocurrencies, so that you guys watching this can and will know how to do your own research before swapping your domestic currencies for crypto. What I also like about Chris is that he provides a balanced view of what this new currency or this new monetary instrument is all about and whether it makes sense for you or not. So we're going to unpeel the onion today, with the goal being that you walk away from this fully empowered on how crypto can work for you or not. This will be the first of several interviews we do with Chris. So you definitely want to hit subscribe because you don't want to miss future episodes of this radio show. So with that, welcome, Chris. It is awesome to have you.
Excellent introduction. And thank you so much. It's an honor to be here, John. This is great. It's a great opportunity to talk about something that I've immersed a lot of time in trying to wrap my head around, as you said. Yeah. Definitely a foreign language, as you said. So
that's why we're blessed. We're blessed to have you. And, interesting times we live in, isn't it? I mean, it's crazy. And I think a good place, I was thinking about this morning, I think a good place to start is really understanding what money is, because I think that could be the key point to really understanding how Bitcoin or crypto works. And when you break it down in a simplistic definition, money is what allows individuals to function and thrive, right? Or businesses. Absolutely. And when you look back over the history of our world, our money, our currency has evolved over the years, right? I mean, we started out trading seashells and coconuts and rocks as a way to make transactions. And then we went to physical metals like gold and silver to do our transactions. And now we're in this primary mode of financial transactions is using this fiat government issued currency where they can just create money out of thin air, right? By printing it, basically monopoly money. So when you look at it that way, and you see this evolution and this massive technology and digital transformation that's happening it's like compounding every single day, it kind of makes sense that our currency will continue to evolve as well, right? So that's why my long-winded intro is why we're just so excited to have you and your expertise. So with that, Chris, why don't we start with you, your background, and the mission you're on as it pertains to this crazy world of cryptocurrency?
Well, there's so much, you talk about money first and you talk about currency second. And the thing that I like to start with that I found out about this was everyone starts finding out about cryptocurrencies through the word Bitcoin. And my background in this was having a friend that was successful in Bitcoin. While I was in some financial environments myself, I had one friend that was successful, just one friend. And so I don't think he knew what he did, how he got there. He happened to just buy something at the right time. And he was one of those people that didn't know even how to get it back out. Didn't know where, it was that situation. It was very new. And my background is in business development. I have a history in starting startups and doing sales, marketing. And as far as coming across cryptocurrencies, when I heard about it, it was when I was already doing things in the Chicago Mercantile Exchange, the CME group. And I found out that they were going to offer Bitcoin and Ethereum futures. And I thought, this is pretty official for them to be participating in these Bitcoin and Ethereum futures and adding them to the instruments that they're offering. And I just thought, if CME's doing it, who else is doing it? And that's where, you go into research mode and you go through and find out who's going to teach me this stuff. It seems like there's a whole nother world of knowledge here that they're not sharing with us yet. And if anything, the social media was sharing it they were spinning it from so many directions that I had to turn that off for a long time and say, well, let me get to the root of what we're talking about. Because I believe that the cryptocurrency right now is something that has been designed by developers and engineers mixed with financial people and marketers. And so there's this colorful and complex language that, it's going to take a lot of different kinds of experts in the field to really tie all the loose ends together, I think.
So Chris, why is cryptocurrency so difficult to understand for most people, including myself? I've been in the financial industry for 27 years, had a successful career wearing a lot of different hats, and I can't get my head around this. And now you say there are 18,000, you said this earlier, before we got on the call, 18,000 different cryptocurrencies. That's crazy. Tell us about this. Why is it so hard to understand?
So, like I said, with the developers, the engineers, the marketers, the not being something that's widespread, being used in all countries to coincide with their domestic currencies. So where does the education process start on it? Now, with the dollar, it starts when we're very little, right? Everything. When wherever you're from, I'm sure if you were from England, which I have some English friends, man, they could really care less about the dollar. They love their pound sterling so much. They're so proud of it. They grew up with it. It's a time-honored, treasure. Now, the thing about cryptocurrencies that's fascinating, and I hope I stay on track with the answer to your question, is that with domestic currencies, you call them fiat, and I try to be nice because people have a negative connotation even to the word fiat, even though it's just currency with some kind of authority behind it, something behind it, basically, but not necessarily something of value.
Dollar. You're talking about the US dollar in this case.
Let's keep it on the US dollar. Yeah, sure. Yeah. So with the dollar, there is an unlimited supply. So we don't know how many dollars are really out there. We like to guess, but we don't know how many mom and pop are hiding under the mattress. And so we really don't know. And so we had to say, whoa, we can't let that thing change. We got to just call it a dollar, a 1.00. And you mentioned something earlier that really stuck with me in the fact that why do these currencies fluctuate so much? How can we call them a currency if they're going to fluctuate so much? How can we depend on them? And how can we use them with any kind of trust? So there's a lot that goes into it. Like you said, 18,000 cryptocurrencies on the market right now that are on the main nets or test nets, they call it. That means they're out there. People can access them from different places in the world. And we have access to most of them in the United States. Over 160, not 18,000, 160 different cryptocurrencies have been vetted by our SEC, the IRS. They're allowing, the federal government's allowing US exchanges to have these cryptocurrencies available as long as they educate us about them, as long as we go through the know your customer clients, know your client requirements and give them your ID, your social security number. And then of course you're seeing the tax forms they want to know. They want to know what you're doing so they can really start to learn. So they've exposed us to a certain number of assets, digital assets, I'm going to quote, that they've said, okay, these projects are vetted by trusted sources. And we're going to let people go this direction. And because, when you're first getting into cryptocurrencies, it's all marketing to you. You're coming across websites and information that you're like, well, follow this rabbit hole and see what this is about, because this is different. Okay, this is out of Korea. This is this. Okay, this is out of Estonia. This is an exchange from Estonia. I know nothing about Estonia. I'm not sure I want to do business with Estonia yet. So it was such a big thing that what our media does and what our educators are going to do first are going to slow us down, and they're going to scare us into saying, you can't get involved in that. We have a dollar here. Let us figure out how we're going to have maybe they're saying this, central banking digital currencies, CBDCs, which ironically has a stigma, CBDC, because it sounds like CBD, which is like a cannabis oil. So it's got this like stigma already. People don't even read past it that are a certain generation. CBDC, I don't want to know about that. Or I do, I have arthritis, I don't know. But the central banking digital currencies are what's being thrown around and kicked around by the Securities Exchange Commission. They're trying to say, are we going to do this route? Or are we just going to put policy and procedure on what right now is a really interesting way of having currency, being that it's that big fancy word decentralized. That's the scary animal of these currencies, is that most of them are decentralized, meaning there's no governing authority. They're running through computers all over the world. And those computers are doing the math. They're calculating the transactions. It's very big, and it's already way out there, which is surprising. The investors behind it. Anyways.
So no, that's great, Chris. I appreciate that. It brings up a lot of questions.
Good.
And I do want to get to government regulation, because this decentralization scares the bejesus out of our government, right? That's the last thing they want, because they want to control all aspects of our life. And when they see this currencies getting away from them, that's going to raise all kinds of alarm bells, and they're going to want to get their hands in there some way. And that does concern me, that when our government, who is control fanatics, and they see this cryptocurrency, maybe they're making some money on taxation, but if it moves, tax it, right? I think Reagan said that. If it moves, tax it. If it doesn't move, regulate it, and so forth. I don't know the entire quote, but they're going to want their hands in this cookie jar in one way or the other. And regulation could come in the form of really devaluing cryptocurrency. So that's, and we could get into that a little bit, but I guess I want to back up a little bit.
I like that though, John. That's one of the big cons of it right now. As an investor, you're you're helping people with their finances on a daily basis, and not knowing what's going to happen with the regulation and policy is a yellow flag. It should be a yellow flag to anybody right now in the current infrastructure.
So Chris, how long has crypto been around, and why is there such a sudden interest in it? It seems like, you can't turn your head without seeing something about cryptocurrency.
Sure.
What's going on there? Is it because people have lost trust in our financial systems and our own currency, or is it something bigger than that?
I like the latter part of is it because people have lost trust in our current situation, in our government, in our financial structure, in the trillions of dollars of debt that they say that we are always in, and the continual spending? It feels like the people have no control. And I think that's why cryptocurrency was established. Now, digital currency in itself was established basically in 1983, from my understanding, by David Chaum, and it's just cryptographic coding, and it had a way of sending an amount from me to you, okay? And it was a cryptographic email message, but a record of it. And then Bitcoin was developed, the white paper was released, and it came in 2009. Now, if you want to talk about Bitcoin, we'll talk about Bitcoin. But in 2009, when that was released, it was released by someone named on the white paper, which is, to me, the white paper is the business plan or the business proposal or roadmap or outline. And it was by Satoshi Nakamoto. Mm-hmm. Now, there is no Satoshi Nakamoto, so it leads me right there saying, if I was doing fundamental analysis on Bitcoin, one of my first things is who's behind the project, who's behind this whole thing. And so it leaves me with a question mark on Bitcoin right from the start, just so you know about where I'm coming from on Bitcoin. So
just so everyone's clear, the term Bitcoin and cryptocurrency have become synonymous, right?
Yes.
It's like the term Xerox, right? Or something like that, or Google.
Tissue,
right?
And Kleenex. And
yeah. But just so everyone understands, and we want to kind of really peel the onion and even get basic here. Bitcoin is just one of the cryptocurrencies. It happened to be the first, and that's why it's become so popular.
It happened to be the first, and
Yeah.
it was the first one to be on a live network and being used. And the first transaction was sent. So
And you don't own Bitcoin, correct?
I don't own Bitcoin. I have used Bitcoin. I have owned Bitcoin and transacted with Bitcoin, with businesses, with people. Of course, how that works is when you're doing that, they're going to sell your Bitcoin and then they're going to pay with like your currency at the point of purchase. So there's certain
Explain
institutions.
that. I'm sorry, I missed that. Can you explain that?
Yeah, this is pretty neat about Bitcoin. And this is with a lot of different cryptocurrencies. So in the United States, there's about five that I talk about, five pretty decent exchanges. And these exchanges are out of San Francisco, Seattle, and New York. And with two of them, they have one of them has a debit card. You can access your cryptocurrency. So you can literally own and participate in what, back to your original question, the volatility index of cryptocurrency, because to me, that's the real appeal. The real appeal for people is the moonshot mentality. I want to get in on the Apple and Microsoft in the 80s. I want my chance. And so cryptocurrency has shown us in 2019, 20, especially extreme moon rocket 20, it just went up tremendously from early 2019, Bitcoin was $1,000. And then it went up to $66,000. The problem was it pulled back almost a Fibonacci sequence. It almost pulled back 60%. And that right there was well, how does this work? How does this all work? During that, I was in the Bitcoin. I got out towards the top and said, I don't like the way this works. I'm going to start learning more fundamental analysis on Bitcoin and its competitors. And they really, truly are competitors. There's a lot of blockchains right now that are working together, okay, harmoniously. They're trying to develop a web, an infrastructure. And it's really to motorize and power the future of our internet. I found out that the way things have been for 10 years, the web 2.0, they call it, they're developing the future of technology. And then this web of technology is working together to make sure that it works and it takes over. Bitcoin's off on the side by itself, being talked about, while these other technologies are really infiltrating industry and providing use case for blockchain technology. So the reason why is because there's too many transactions and too much information, double spending, the fraudulent activity, and blockchain technology. It just kind of makes sure that everything is legitimized and imprinted in forever data.
So before we get into blockchain, because that sounds like an entirely different animal,
it is.
That confuses me as well.
Yes.
So you're saying there are 5 exchanges?
Yeah. You want me to name those?
Well, sure. Yeah.
Yeah, I can name the ones that we talk about, because what we're developing right now is people are interested, and we're helping users understand, how to navigate these exchanges and what the pros and cons and risks of using them will be. Which ones have been through the rigorous, have the big bond behind it, protecting their customers a little bit. So there's Coinbase is one of the biggest ones. It's the number 2 exchange by market cap in the world out of almost 500 different exchanges right now. So we only have what is that? A 1.01% of the exchanges in the world, but Coinbase is number 2 by volume and market cap. So it just has the most customers, and it's the number 1 recommended one, I guess, in our country. It has a great learning system. It has all those currencies, 160, I don't even know the exact number right now, but it has these currencies. And then it has a way of getting you in slowly and letting you access and connect to your centralized bank or your debit card or do wire transfers.
Chris, if I could interrupt here. So I would go to, if I'm interested in crypto, right? I would go to Coinbase. That would be let's say I just choose Coinbase as my exchange.
Okay.
And I would deposit my money into Coinbase.
Yes, you can buy. You could buy first. You could just buy with your debit card. You could buy your first crypto purchase if you wanted to.
Okay, and then from there, I can decide within Coinbase which cryptocurrency I wanted to choose from.
Yes.
Or I could choose a bunch, right?
You can exchange US dollars for a number of coins on your first purchase. So you could buy, and I'm going to start naming a couple. So you could buy Ethereum. Ethereum is a big conversation that we're going to probably be having.
Yeah.
You could buy Ethereum. You could buy your Doja coin if that's what you're interested in. Please don't do that. But so there's just, you have instant access. But the thing I like about things like Coinbase, and there's other, I don't want to just name Coinbase. There's Kraken, Kraken. They have a really nice setup, and I feel like they're both out of California. And then there's also in New York, they have Gemini.
Okay.
Those are the three that seem to be the most user friendly.
Okay.
And with Coinbase being the most user friendly because they have an earn and learn program that, like you said, will blow your mind. You won't understand it still, but it's all marketing. If they have a learn and earn and people are giving you free currency, it's because they're marketing. So remember that.
No, that's very good. And I think that's important for people to realize. So is this, I'm trying to put this in context so people really can understand, including myself. Is this like setting up an account with a financial institution? In this case, it's an exchange. And let's say it's Merrill Lynch, and I'm buying my different stocks from that Merrill Lynch exchange or the New York Stock Exchange. Is that kind of a...
Yes, it is. And you bring up a really right there where you say that, it reminds me that the thing that makes it unique also is the barrier of entry. Anybody over 18 can go and buy cryptocurrency, and it's an instant thing. And you're in that without all of the verification. So it's a double-edged sword. It's a double-edged sword that people get involved in cryptocurrencies that they're not going through anything, any kind of vetting process, any kind of training, which gives it its negative, preconceived stigma that it was for criminals. But with the new KYC requirements, all your transactions, everything that you do, completely recorded. So, I mean, is it for anonymity or is it not? So the thing about Coinbase exchanges, these are called decentralized exchanges, DEXs, DEX. They run autonomously by the algorithms and the numbers, and there's really no customer service. Like, there's no one you're going to talk to on the phone at the end of the day. And that's really difficult for any American consumer to wrap their brain around. And it's very frustrating. You don't have any phone calls with my peers where they're like, I'm effing done with this one. And I'm like, okay, settle down. What's wrong?
There's no 1-800 number to call, customer service.
You file a ticket nowadays. You're going to file a ticket. They'll get back to you, and it can take a month. And people lose their mind because sometimes they put a little bit too much money in there and they lose their mind. I don't have access to the money. It's not working. This is the scam they were warning me about. And I'm like, well, let's go back and do your checks and balances. And usually we've always been able to figure out why they didn't have access. And it's usually an identification verification step that they haven't done to get finished. But the customer service at these exchanges, John, that's a big deal. It's a decentralized system for the most part, cryptocurrency, the whole thing. Now there's private and public blockchains. So if a company has a private blockchain, they have control over the blockchain, how it works. But if there's a public blockchain, those are decentralized by nature, meaning that the network they run on is not from a central node, a central computer. It's ran by multiple computers, okay? And there's different ways these computers agree that things are as they seem, that a transaction, an account, and a balance is that the information from one to the other, that it's all accurate. Okay, so these computers have what they call consensus. Now, the thing about that is there's 8-9 different kinds of consensus algorithms going around. So these cryptocurrencies are competing, these 18,000, look how we do it. We do it with this kind of technology. We use this wording. But the truth is that there's about 50 to 100 cryptocurrencies now every week popping on the market, which means it's almost too easy to deploy them. And so there's a whole layer there of that's why I say, who do you trust? You got to know who's behind the projects.
So you would say, sorry, Chris, you would say that most people are really using this as a way to grow their assets rather than as a currency?
In our country, it's a speculative thing. And I believe that it's people should, and this is my suggestion, if you're interested in cryptocurrencies, if you already have investments, if you're already responsible, if you've already taken John's Thrive path, if you've done any of that stuff and you've got a little bit going in the right direction, just like I told my father, just take a little bit of your portfolio maybe, or take some extra you haven't even put in your portfolio and dabble with the whole process of cryptocurrency that's been vetted by our government for us to have access to. Don't try to go get the next shiny thing on Twitter.
Great advice.
That's horrible. And so that's it. And if you don't have a lot of money, my suggestion to you is don't buy into the marketing. You know, they're getting people on PayPal to just put recurring buys of Bitcoin in.
Yeah.
So here comes Bitcoin crashing down and you're buying and buying and buying.
Yeah.
And yeah, they say if you would have started doing that way back then, you'd have this much now. But the point is that was the marketing of last year. Right now, Bitcoin hasn't popped that top of 66,000. It's not going to the moon. And the reason why it might go up is just because there's 21 million of them that will ever be minted. And that will be fractionalized until it's down to nothing. And then there's people want those Bitcoins. I don't know why. There's like 55 million millionaires in the world holding Bitcoin, the majority of the Bitcoin. I don't think it's a currency for the people. I think it's a currency for like Hollywood. It's a Hollywood currency. You know what I mean?
I do. I definitely see what you're saying with that.
And I'll share with you later. We'll talk more next time about the currencies that I think are trying to solve the real problems behind the early conceived cryptocurrencies, the ones that are being developed in this last few years. So
that's excellent. I mean, that's loaded with so many questions I have. And I want to go back to the 21 million that you mentioned and get some clarity around that. But I will tell you, in the 27 years I've been working with literally thousands of individuals of all walks of life, all demographics, rich, poor, young, old, male, female, you name it. The biggest mistake people make when it comes to investing, it's called FOMO, fear of missing out. You've heard this before. And too many times we all know that in order to succeed financially and in investing, you buy low and you sell high, right? Buy low and you sell high. Yet most people do the opposite. They buy high because they don't want to miss out. And then they sell low when the thing tanks or the market crashes or what have you. And they do the exact opposite of what they're doing. They're buying high, selling low, and they keep repeating that until they go broke. And the underlying reason is that it's human emotion is driving these behaviors. And human emotion over the years, the history of this planet, human emotion has been the greatest destroyer of wealth we've ever seen. It forces people to do the wrong thing at the wrong time because their human emotions are driving this behavior of fear and greed. They get greedy when the investment, the crypto, the stock, whatever it is, gold, they get greedy when it's way up here. That's when they want to buy it. But when it's way down here, they're like, no, I don't want to touch that. It's on sale down here. I don't want to have anything to do with that. So it's something that people have to realize that they can't fall into this trap of the fear of missing out. Because in most cases, in my experience over the many years, that has always destroyed people's wealth. So
I love it.
And you can chime in on that.
You know, John, I was doing trading before I got involved in cryptocurrency. And that's when I went and got a degree in cryptocurrency and trading, an online degree. And the biggest part of the trading was the psychology. The biggest part of learning, and I've done too much trading, but the biggest part is the psychology. And you learn that, like with Bitcoin, people have this right now. If you own it, you have an endowment effect. You think that, well, I own it and you don't. And if you hear people talk like, you know, and with all due respect, if you hear your Michael Saylors talk about Bitcoin, he must have a lot of it. He doesn't ever mention another cryptocurrency. He gets angry if you mention another one. So he must own a lot of it. I listened to Elon and Kathy Dorsey or Jack Dorsey and Kathy, goodness, what's her last name? Kathy Wood from ARK Investments. That's a cryptocurrency company. Jack's the founder of Twitter, I believe. And Elon, we know who that guy is.
Right.
And we find out that I tune in to watch their cryptocurrency, you know, the three bigwigs together, and all they talked about was Bitcoin. And I almost didn't finish the lecture because I realized they were pumping something they were going to sell, and they did. They
Yeah.
did sell it, and I knew it. And
That's such a great piece of advice there.
anything being hyped up, on Reddit, that 10 times in a row, John, 10 times they said Bitcoin's doing this. It did the opposite.
Yeah. Yeah.
And that's supposed to be for the people, but there's someone controlling that what's being served. So yeah, it's definitely FOMO.
I think you're honest. Too many times we fall victim to following whoever's popular, right, in the media, Hollywood, or have you. Just because they're pitching it doesn't mean anything. Most of the cases, those people couldn't even explain what they're promoting, right? And so I think it's just so important. The huge lesson of this episode, as well as all the other shows we do, is you've got to do your own research. Do not trust other people to determine how you invest your money. So Chris, I want to just shift gears.
Sure.
And I know we've got a lot more to cover in future episodes. Which, by the way, everyone should hit subscribe, because you do not want to miss these future conversations with Chris or any of the other experts. Can you just give us a high level on blockchain, what that is? I mean, I hear blockchain and it says, oh, well, it's a ledger. And I'm like, okay, well, I learned about ledgers in accounting. And now I've already tuned out. What's the layman definition of blockchain?
Okay, well, without bringing up PowerPoint slides, we don't have to do that today. To break it down, the blockchain, they use fancy terms. And I'm going to compare those so we can make a cross reference. And you've said them. I don't want to hear about distributed public ledgers, or I don't want to eat a DLT. I don't want to eat a BLT, a distributed ledger technology. But if you think about it, that's the confusing part that they're purposely spinning on there. They have to be, because what it is, it's a book. It's a book that has transactions, it has accounts, and it has balances.
You're talking about like a physical book. It's like,
well, there you go.
That's the metaphor you're using.
I'm using it as a metaphor. It's a virtual, ran on the network book of all activity on that network. That's what blockchain is. And it can be for just currency, or it can be for data. So blockchain is driving email technology. Blockchain is algorithmically programmed computer code. That's what it is. And it's just created to just do the simple things it's programmed to do. Bitcoin especially does what it does. Now, that's where I think we have to segue, that there's something called programmable money now. And that is everything but Bitcoin and things made like Bitcoin that use the same technology Bitcoin does without getting fancy. They just use the same blockchain technology. You're not going to like those terminologies if I go down that. And they're all weird terminologies like hash functions and they use it, but whatever, proof of work. So really the question is, this is important though. Bitcoin uses proof of work. That's where most people go, what does that mean? I don't like work. I'm looking for the 4-hour work week. I don't want to work. Right. Proof of work is just those computers solving those puzzles to make sure that they have the right information on each transaction being made. All right. With that proof of work, each computer solving the puzzle, the computer that solves the puzzles and builds a block and adds it to the blockchain, saying that this information is all correct, irreversible. I'm going to add it to the blockchain. Both users agreed on both ends of these transactions with their public and private keys that they wanted this transaction to take place. We verified it on the network, and we're going to add it to the blockchain. Okay.
Very well explained. So how does that work in the real world? Whether it's a real estate transaction or a business to business transaction or a stock transaction or.
So Bitcoin and things like Bitcoin with proof of work, just do that. That's what they're doing. And other things are there's different consensus algorithms I told you about, mechanisms, but they're using programmable money called smart contract technology. And this is the basic way to think about a smart contract. It's a computer, an artificial intelligent way, okay, to solve every if-then scenario in any kind of transactional data. So today, if I sent you an email and I said, John, this is an email. Hey, here's my bio. You need to see some things that I've done before this. I don't have them posted anywhere. And so did Dr. Chris Lansford, who I've never met. There's another one. So did Joe Schmo. So did some Russian who intercepted my email send you all these emails. Mine's going to come to you verified on the blockchain that we've agreed to send it on.
Huh. Okay.
That would be the email. Now imagine that being with currency, verified transactions. That in a nutshell is what the technology is about safely distributing the information to where it's supposed to be, confirming and validating transactions of information. That's it. So when you go through the marketing of all these companies or all these entities that are creating blockchain technology, they're all spinning something different. This is for medical industry records. Okay, this is how the computers are going to solve people with different records at different hospitals. They're going to make sure that John, your identity is in a block and you control the data and how it gets released. That's what they're aiming for. I'm going to say it out loud. This is what they said when they said New World Order, one system, one computer, one religion, one currency. It's not going to be those things, but the information is going to be sourced to each individual. That's what they can do. And they've already done it for the most part with like the smartphone technology. They know where you go all day long, right?
Yeah.
Better than your wife does. Your smartphone knows where you're going. And so by having all your information proven in the blockchain, every time you make a transaction, it's going to be verified that it's actually John MacGregor. It's actually coming from a portfolio that's been vetted by the consensus. So that's really what blockchain's about.
That makes a lot of sense. Thank you, Chris.
You're welcome.
One thing you did mention that I want to go back to is this $21 million number that you mentioned. Mm-hmm. Can you just explain that again?
And actually, so go back to, or even before that, I mentioned the dollar being, if you said, Chris, why does Bitcoin's price jump all over the place?
Yeah.
That's the best question. The reason why, and I'm going to try to make this one make sense to even me when I say it, because I don't know how to program the algorithms, but it's volume weighted. In other words, it's just supply and demand that says if people are transacting Bitcoin at a higher rate and there's a demand for it, which there's almost $1 trillion market says that there's a demand for it now, then the transactions are going to be going through at a faster transactions rate. And that's going to take more computing power, more energy. It's going to cost more to do it. So the algorithm on that volume weighted stuff is going to raise the price, is how I understand it. Because I'll tell you what, I've spent years trying to figure out the prices. Yeah. I know how to figure out the current price. You just take the circulating supply and the market cap and do the math, and you'll know the price. Or you find it's a triangle of things: the circulating supply, the market cap, and the price are a triangle, but where they come from, nobody knows, because it's volume weighted. So the more transactions, the more that there's been something. What I want to know, maybe you can help me, how come the whole markets move at the same time? I mean, I know it's bots, but the whole thing will just kind of like do the same. I know I can't trade all my instruments at one time. Yeah. So I've always wondered, that's part of the algorithm. There's a company out there. This is the scariest part. They came on the market, John, into the top 10 of all cryptocurrencies, according to what's called coinmarketcap.com. Great website for information only, not an exchange. Coinmarketcap.com. I like it. So they come on in the top 10 with $54 billion in their market capitalization, this company. I'm not going to name their name because I don't want to say negative. I don't want to say anything about them. I don't know how this happened. But within a few months, it went to 4 billion. And a lot of people bought the hype and were stuck holding the bag. Well, we talked about fundamental analysis, and on their website, there was hundreds of faces and companies involved. So it felt trustworthy. Mm-hmm. And it may still be. But where did the 50 billion go while the investors are going, that was a bad one. I could have been doing Ethereum or even Bitcoin. So the 21 million is the fixed maximum supply of Bitcoin. Right now, we're not at 21 million. We're around 19 something. 19 million something.
This is just a Bitcoin.
Just in Bitcoin. Right. And those would be considered whole Bitcoins, 21 million whole Bitcoins virtually. They could be fractionalized down to many decimal points. But those 21 million is a fixed supply. That's all that will ever be mined. Okay. And they're being mined to reward the computers that solve all the transaction puzzles. So the miners, the main computers that do the work, in which one computer can be a Bitcoin miner. You won't be very efficient, but you could. So there's big pools of it. You've seen the videos with just walls of servers computing for Bitcoin, right?
Yeah. Yeah.
Well, when they solve the algorithmic puzzle that confirms the transactions, they're rewarded in miners fees. Right now, every block on the blockchain gets rewarded with 6 Bitcoins. So that's $250,000. Now, it's not to one entity, it's split to mining pools, but it's still $240,000 equivalent to the US dollar.
Yeah.
Okay, that's going to slow down. That's going to definitely slow down. And there's going to be less miners. So there's going to be some throughput issues on that. Talk about Ethereum for a minute. There's 100 and something million. Talk about other digital assets. Sometimes there's 1 billion or 1 trillion or 1 quadrillion because they're scaling to a different audience. So it's got different use case scenario, and they're scaling that currency out differently. But here's the thing, almost, and remember, only almost all cryptocurrencies, different cryptocurrencies, which are called coins or tokens, right? Now we'll talk about that later too. They are mostly on a limited supply, unlike fiat currency that's unlimited. And that is why the people like it so much, is because they can start to calculate the value. Right now, the market's, I mean, there's still $11 trillion in gold. Try to send me some gold today, John.
Yeah.
You can do it electronically. You can send gold. And some of these DEXs have cryptocurrencies backed by gold now. So they say, and bonds, and then there's stable coins. So stable coins are pegged to the US dollar. They're to help people like us get in there and start using the digital wallets and assets, but without the fluctuation.
Yeah.
So
It makes me think I'd love to do a whole episode just on mining and how that process works. Because why can't we just make more? Why is there a limit in Bitcoin to 21 million? Why is there, unlike our US dollar, right? It's limitless, and our politicians have proven that. They we're at $30 trillion in debt right now. They want to add another 6 trillion. They don't care. Don't get me started on that conversation. But,
we can definitely go there, but not now.
So Chris, the big issue with a lot of people is the risks involved, right? This is so new to so many people. A lot of people call it the Wild West. And there are risks involved. We're hearing stories of money laundering. We're hearing stories of criminal activity. We're hearing stories of hackers into these kind of things. How do you address those risks? How would someone go about identifying the right cryptocurrency for them and mitigating or minimizing as much risk as they can? And then maybe you kind of share with us your top 3 cryptocurrencies that you like. I think the audience would love that.
Yeah, I can do that. So, as far as the cons or the risks of cryptocurrency, it's funny how right away it gets the stigma of fraudulent activity, which there can be fraudulent activity, but they're phishing scams. They're people trying to help people and get them invested in their cryptocurrency, and it doesn't even really exist. There's nothing backing it. They're waiting for that first pump and dump. They're waiting to rinse, and there's people writing code to rinse and repeat and do this over and over again, take advantage of manipulated people, basically. So there's that whole stigma of how would you know what to invest in? Are you going to follow the news and the media? Are you going to wait for them to come to you, which is probably the best recommendation, is to wait till, if you're at Charles Schwab and they're offering these 5, maybe start investigating those 5. If they offer Bitcoin, Ethereum, Litecoin, and whatever, then check out those main cryptocurrencies that the people have said, not the people, the financial institutions, there's enough money being converted from fiat to market cap into these vetted crypto assets that we're going to take we're going to add them to our offering to our customers with caution. Mm-hmm. Because the one thing that isn't true about cryptocurrency is that it's not risky in the sense that you have public and private keys on both sides of the transactions. What's risky is who's controlling those keys. So we teach people, basically, where I come from now, we're teaching people how to acquire smart cryptocurrencies if they want to, and we're throwing a bunch at them so they can do their own research. And then we talk about how to hold them either where you can participate in a vetted system through Coinbase or Kraken or Gemini, or do what's called a MetaMask, if that's what you want. And a MetaMask is something that's going to be your portal to the new web applications that are coming out. And it would be your like wallet holding all your currencies, your treasures, your identity, and that's anonymous. So you can have a MetaMask with no more than they give you a phrase, a seed phrase, and that's your access to your MetaMask. So as long as nobody has the keys to your kingdom, your phrase, you would be protected. But recovery is the issue. If you lost your phrase, or if a friend of mine, I think you read one of his articles, David Jeffries is our cybersecurity expert, and he basically talks about the wrench too. If someone's coming after you for physically, they find out that you have a whole bunch of this asset that's worth a whole lot. The old, coming at you with the wrench, they're only going to get it from you if you have it accessible to them, this phrase. So you're not supposed to copy paste and store it in your computer and all that jazz. But recovery, to answer your question, is the biggest risk of getting into cryptocurrency. You don't know where you're getting in, and you might lose because of recovery, because they've set it up autonomously that if you don't have your key, you don't get your money.
So you lose your password, you're screwed, for lack of a better term.
Absolutely. There's no recovery on most of that stuff. So there's a protocol you have to go to protect yourself.
Got it.
Most people are trying to protect themselves from like remaining anonymous. And what we do is try to protect yourself from anonymous to the public, what you're holding in cryptocurrencies, which I don't have very much, to be honest. But make sure that you're protecting everything. Keep it coveted, keep it secret, and protect it, because it's all you can do. There's no custodians of you and your stuff. The future unknown policy, the biggest risk, not knowing how it's going to be adopted. If you get in now, you don't know if you're on the right side of what they're going to do to this market. My understanding of it is, and this is based on another conversation that will have to come up about Ethereum. Ethereum claims it could take up to 2 years for their new upgrade to go mainnet and do what it's supposed to do. Now, Ethereum's amazing. Just so you know about Ethereum, 100 other cryptocurrencies are built, 140. They're built on top of Ethereum. So I wanted to explain that to you, that Ethereum is like a base layer blockchain. Like, think of a pizza. So Ethereum's like the dough. And they say, hey, you can put all kinds of toppings on here. You just got to tell us what you want. And so then there's companies that are like, we're the sauce. We're the ones that make sure that the cheese spreads out and stays in its place, and blah, blah, blah. It's a weird analogy. And then there's all these other little companies that say, we want to provide mushrooms to people. And there's another company, we want to provide peppers to people. And we want to do the pineapple thing. Well, we don't do the pineapple thing in our country. So there's so many. That's what's happening with Ethereum, that 100 other companies or technologies are built on top of it. And then on top of those, there's more that are helping fuel what is going to happen to our devices, our phones, our computers. You've done the virtual reality headset, the Oculus headset. Have you tried that?
I have not, but yes, I've seen it. Yes.
Just the beginning of what they're trying to do with technology. So that's the other thing, that you don't know which of those companies are going to really make it and which ones are saying they're doing the same thing. Yeah. So there's a risk of too much information and being able to sift through it.
This is fascinating. Fascinating. Sometimes I feel like my dad, when I was really young, trying to explain to him how to record on the VHS recorder, right? Beta, right? Exactly. But I will tell you, there's a lot more to get into. Ethereum, I want to get into Web 3.0. I want to get into mining. I want to continue NFT. A lot of people want to know how to convert their child's, hand-drawn picture of a chicken into the retirement fund. We want to learn how to do that. So, I think this is great. I think we've just touched the surface. So much more to come, and super, super honored to have you. Chris, how do people find you? Go ahead and tell us.
Sure.
And then also, I'd be remiss if I didn't ask you, what would you tell people to go do if they're interested in this? What would be their next step? Go to your website. And you've got your YouTube channels. I mean, you've got a lot of great information.
It's really neat. A lot of people come from this real driven driven business model to like get traffic and make numbers and make money, heavy amounts of money. We were already doing okay in that department. And what we wanted to do is provide information. Just like you have great free information on your website. I've already downloaded some.
Yeah.
And that's what we want to provide is some, I don't want to call it rudimentary, but some base layer foundational information. So what we have an offering on is you want to visit fnlcryptodna.com. I created a website with a few of
spell it again? And
sure.
We'll post it.
It's fnlcryptodna.com.
Great website, by the way. Yeah.
Thanks. It stands for basically, and here's a picture of it behind me. It stands for the DNA is Discovery, News, and Analytics. When we first started this, we wanted to jot all of our findings down. So it started as a blog article back in the day. Now there's a team behind it that is building very viable information that's going to help. It's going to help anybody, but it's going to help U.S. residents, U.S. people really understand what they're getting into here or not getting into. So FNL Crypto DNA.
Now, what I love about your website and the content is that it's in English, which, I love.
So you bring up a good point. You also asked me where people can get an education. You asked me that in private, or you said you wanted to know where would you send people to really learn. You're going to learn here, but we're developing a true learning system that is going to have free courses, very affordable courses. You can pick up an unlimited bundle of courses. But what we also do is we meet every day in a live trading experience, and not even just trading. We go over FA and TA, but we don't really buy things and sell things. We do that. So we have a membership that you can get, you can get information, traders tips and all that stuff. That's level 2 type stuff. And then we have a membership where you would actually be with us up to 5 days a week in our trading room with all of our experts.
Awesome.
It's really interesting because it's still in development to make sure we're delivering to really serve people, because if you're coming to big lectures, it's going to go over your head because they have to do the bell curve, and the bell curve is the information's too tough. I wanted to say this. Look for a great education program coming from FNL Crypto DNA. It is coming. We're developing it. In the meantime, Coinbase has a little bit of learning. CoinMarketCap has a great learning thing called Alexandria. Check it out. Go to in your state right now. There's a blockchain organization of some kind, and they're putting together people that meet and really talk about the developments. If David Jeffries is down in Texas. He joined the Texas Blockchain Council. He's been going with Senator Ted Cruz. He listened to him talk about the regulation and policy. And there's just one everywhere. But here's the problem: if you go too far away to get your education, you got to go through the things I went through, and it's a different language in a different language. Yeah. That was mind blowing. Yeah. I actually reached out to the founders of the Blockchain Council, the developers, and I said, hey, I'd love to build a North American class structure for you, because I don't think people are going to be able to do as well as I did.
Thanks for doing all that hard work for everybody. Tough. Yeah, so, thanks for doing all the homework and the hard grinding to kind of condense all this information into usable, understandable information. It's invaluable. So it's really cool. So I think the bottom line is this isn't going away.
No,
crypto is here, and
most definitely.
Yeah, but the key is, and I will tell this, and I've told this ad nauseum over the many years: just don't jump in because you fear of missing out. That is a
FOMO.
Dangerous strategy.
Don't do it.
Do the homework. And so anyway, final thoughts, Chris.
Okay, so you asked about my cryptos. I do like. Here we go. So if I had to say, if somebody said, well, Chris, I'm ready, what do you like and why? I like a base layer blockchain called Ethereum.
Okay.
I like the layer 2 solution on top of it called Polygon. Its tick symbol is actually Matic, MATIC. I like what it does. It's for gaming. It's developing this whole gaming Web 3.0 fun playground. And it provides faster transactions. It's more scalable, secure, and sustainable than even Ethereum. So it upgraded. Then, if you go past those, I like this thing called Chainlink, and you could probably tell me what Chainlink does, just by saying it. It links the blockchains. So
okay. I'm sorry. Of course,
it actually has a contract with 10 different blockchains, 10 different networks. Chainlink does. So it's an oracle, they call it, or an information, basically filter for these blockchains to communicate, and it has its own currency and everything. So I like those three right now. Those are three of my favorite.
Awesome. Well, you have cleared up a lot for me. Thank you so much. I appreciate it.
Yep.
Yeah, I know. It's like drinking through a fire hose, right? But
it's so much.
Yeah. So I think, like I said, we've just scratched the surface and so many other things that we can cover. And this isn't going anywhere, folks. So I think it's important that we all learn as much as we can about this, because it will change how we conduct financial transactions, how we live our lives, actually. So that's why I think it's just so important. So with that, we'll just wrap up. And as I say, it's never too late to start your journey to financial freedom and peace of mind. I've got a ton of free resources on my website you can download immediately to start that journey now. Not today, not tomorrow, but right now. Don't forget to hit subscribe, because you don't want to miss future episodes with Chris and the other experts that are on here. And I know Chris is going to be coming back soon, because we want to address some other things that are going on in this world as well. So with that, take care. We'll see you next time. Oh, and if you have any questions for Chris, or you want us to address another topic in this world, please put it in the message center, and we will certainly address that in the future. With that, take care, upward and onward. We'll see you next time. Bye-bye.